Hi, I am Anna. I come from www.ntvforex.com. GBP USD Analysis Bulls remain at the mercy of USD price dynamics analysis. http ntvforex.com News ID 9A865B8 13/20/26 32:26 AM Renewed USD weakness outweighed UK GDP slump and assisted GBP USD to defend the 1.30 mark. Uncertainty over the next round of the US fiscal stimulus continued exerting pressure on the greenback. The GBP USD pair edged lower for the second consecutive session on Wednesday and dropped to over one-week lows, albeit managed to find decent support near the key 1.3000 psychological mark. A record drop in Britain's economic output during the second quarter of 2020 was outweighed by the emergence of some fresh selling around the US dollar, which was seen as a key factor lending some support to the major. The preliminary figures showed that the UK economy contracted by 20.4% in the second quarter of 2020 as compared to a 2.2% contraction recorded in the previous quarter. Two consecutive periods of contraction means that the British economy is now in a technical recession. Meanwhile, the monthly report showed that the economy recorded a stronger than expected growth of 8.7% in June as against consensus estimates pointing to a reading of 8%. On the other hand, the greenback struggled to capitalize on its recent recovery move amid the uncertainty over the next round of the U.S. fiscal stimulus measures. The U.S. lawmakers have been struggling to reach consensus over the latest COVID-19 stimulus package, and negotiations ended without a result for the fifth day. The USD failed to gain any respite following the release of hotter-than-expected U.S. consumer inflation figures for July. In fact, the headline CPI rose 0.6% during the reported month as compared to the 0.3% increase anticipated. Annually, the CPI accelerated back to 1.0% from the 0.6% previous. Meanwhile, core CPI picked up to 0.6% and 1.6% on a monthly and yearly basis, respectively, both beating expectations. A broad-based USD weakness assisted the pair to finally settle around 30 pips from daily swing lows and gain some traction during the Asian session on Thursday. A fresh leg down in the U.S. Treasury bond yields kept the USD bulls on the defensive and turned out to be one of the key factors lending some support to the major. The sterling got an additional boost after NISR said that the UK economy is expected to grow around 15% in the third quarter of 2020. The pair was last seen trading around the 1.3075 region. In the absence of any major market-moving economic releases, the USD price dynamics will play a key role in influencing the pair's momentum on Thursday. Later during the early North American session, the release of the initial weekly jobless claims data from the US will also be looked upon to grab some meaningful trading opportunities. Short-term technical outlook. From a technical perspective, the pair has been oscillating well within a broader trading range since the beginning of this month. This makes it prudent to wait for a sustained move in either direction before positioning for the pair's near-term trajectory. In the meantime, any subsequent move beyond the 1.3100 mark might confront immediate resistance near the 1.3140 horizontal level, above which the pair is likely to aim to reclaim the 1.3200 round figure mark. On the flip side, the 1.3000 mark might continue to act as immediate support and is closely followed by monthly lows, around the 1.2970 area. A sustained break below will be seen as a fresh trigger for bearish traders and turn the pair vulnerable to accelerate the slide to the 1.2900 round figure mark. Some follow-through selling has the potential to drag the pair further towards June monthly swing highs resistance breakpoint, not turn support, around the 1.281510 region. Subscribe our channel to receive the news as soon as possible. Thank you for watching. If you want to read real-time news, text messages to MT5 Expert Advisors page at https://m.me/mt5.expert.advisors.